Welcome to Profile Traders. This is Reza and you're listening to my market analysis for October the 27th. So Friday, before the weekend took place, we had a fury of buying that came into the market, and I told you that this move cannot be trusted because they often do that on very low volume prior to holidays or weekends. And then when everybody gets back, they reverse the move. So that's pretty much what they did. It was pretty much chasing it into the close, forcing a panic buying to take place. As panic buying took place, they stepped in, took short position, and then knocked it down during the overnight, and of course they made very good money. Now I believe we are going to churn on the upside or eventually sideways until the Federal Reserve meeting is out of the way by Wednesday. And I believe that on the back of everything that is taking place, global slowdown, dropping of price of crude, sluggish recovery, Ebola, elections, etc., etc., I think that they're going to be extraordinarily friendly to what they will say regarding the market. And as that will happen, I'm expecting a massive rally after Janet, Madam Chairman, is out and will tell us that she's probably going to do nothing about the rates for a very long time. And everybody should expect such a policy to go on regardless of inflation, etc., etc., because rates are here to stay very low for a very long time, regardless what happens or not. Why? Because if the rates go up, the service of debt for the United States will go up so drastically because of this extraordinary amount of debt that we carry, that the country will go bankrupt. And on the top of that, you add all the 0% financing shim and scam that is going on right now in the retail market towards the consumer, that if you take rates up, all these 0% financing deals that are going through, contracts that are being financed based on that premises of very low interest rates, all of a sudden you get an explosion or implosion into the consumer market as well. So I'm expecting a rally that will potentially will make a new high for the S&P. So we shall see, but I absolutely do not see under such conditions to the Federal Reserve not to be extraordinarily friendly. So supports are 1950 as our first level, and this morning I was trying to buy, matter of fact, the zone below 43 to 40, but as you can see we got very close to it but didn't get filled. So the main support stays 40.43, minor support 1950. On the upside, obviously we will be dealing with this 66, and then if we can clear that level, we should go pretty much straight towards 1990 to 2000. So this 66 is very important. That's the level we want to see breaking on the upside, and if it starts to break from this current level, the break should be trusted, because we are spending the majority of the time rotating below the breakup level. By the way, don't teach these things that I'm telling you here for free to others, okay? Because then we're gonna have a whole bunch of monkeys going and becoming mentors and building websites and become market profile gurus all of a sudden. For oil, we breached briefly below 80. I tweeted an article that said exactly what I was talking about weeks ago, that OPEC is becoming meaningless, that there is an excess amount of oil in the market supplied by all the terrorists, generals, dictators, assassins, drug smuggler, you name it. They can have access to that free oil. They will flood the market with it to get cash, to buy weapons and create more chaos. Article was tweeted by me. You can join on my tweet as well. You will get all that stuff automatically tweeted out. MP traders, that's my tweet. So as we dropped below 80, there was obviously a reaction towards that round number, and a buyer came in, pushed it up and closed it at the high. Can I see something really extraordinary having taken place here? Not at all. Just the fact is that it was a failure below 80, and we managed to close at roughly above 80 and a half, which is not something like super spectacular. So market condition on this remains the same as I stated before. It's going to be fast back and forth. You cannot hang on to any given direction for long unless you want to see your profit disappearing by a counter move against you. And as long as now market remains into this state and under such conditions, you cannot rely on much of anything neither. So make sure not to obsess with certain level of support or resistance, because when there's too much chaos like it is involved in here, levels don't really matter much. What matters much is that you catch the right move and you don't become too greedy hanging on to it for too long, because they are usually reversed entirely. As for gold, we had a trading range that was given to you, I believe, between 27.4 and then 32.2. We couldn't exit out of the first one above. Now we are trying to exit out of the one below. As long as we remain now below 1227.4, we are going to retrace on a daily basis here part of the last leg up. The absolute most that we are allowed to pull back in this current leg down is 1200. If we do hold 1200, then we will have a second contact point where we will be able to draw a trend line, and then we can make upside projections. But as of right now, it's in the process of retracing your leg up, and the further and the deeper we will replace, the more when it's gonna come for retesting this high, we will fail. So let's see here how much of a retracement we will have. But right now, obviously, we are on a breakdown mode as we closed, since it was below 1227.4 and we closed at a very thick low of the day. Doesn't look too good. As for Euro trash, I am not going to make much of a forecast on it, because this is going to move like the mother of the moves as we are approaching Federal Reserve BS. If my guess is right, Federal Reserve will say no rate hikes, extended amount of time, easing, etc., etc. Even that QE BS came to the end. It's coming to an end at end of this month. But as I said, QE will not be on the surface of the table so that you and I will see it, but QE will continue under the table. My guess is that it should give Euro a little boost. But I believe it is going to remain quiet until FOMC is out on Wednesday. So this one is really same as crude, a little bit back and forth. Even though that in the very short term we are making higher high, higher lows, that's a little bit really minus, I should say, a microscopic level of bullishness. Is really nothing, three little session making higher highs, higher low. But it allows us to give us a little bit of a support to measure against, which is at 1.267. So 1.267 now is the level we want to remain above it to continue further up. My upside target on euro short term is 1.28 if my projections are right and the Federal Reserve come out friendly. If the Federal Reserve comes against the market, etc., that's a different story, but I don't believe so. So looking bullish, very, very short term, buying the pullbacks towards 1.2669, right around there. Maximum risk that one should take is against the low here. So that's the level to risk in order to attain up there 1.28. That being said, be aware again that tomorrow FOMC starts and it's going to go into Wednesday until they come up with their decisions. Again, this is Reza with profiletraders.com. If you wish to join our community, learn real market profile, trade real trades, give us a shot. Have a great evening.